Hey everyone, John Henry here from School of Trade, and today we're going to be talking about trading with flag price patterns. So, in general, here at School of Trade, we really love the idea of having different price patterns, and whether it's advanced price structure or simpler ones that pretty much everyone has heard of, like a head and shoulders pattern, or what we're talking about today, which is the flag pattern. Now, the flag pattern itself is essentially just a continuation pattern. It's just sort of representing a pause or a pullback in the market after a stronger move. Now, we can see one right here, starting from the low. We get this really strong drive up from the bulls, and we get this period of consolidation where we pull back. And this one is a pretty much picture-perfect flag pattern. And you can kind of see it, right? When I draw from the high and then draw the channel in there, you can kind of see the flag forming right here. What we're looking to do is take a break out of the high and just continue it right back in the trend again. Remember, it's a continuation pattern. So in this case, this would be considered a bull flag because we have that move up, retracement, or a little bit of a pullback here into a consolidation area, and then we break right back up again. Now, sometimes when you're zoomed in this close, it can be a little bit more difficult to kind of see it, right? It's when you get these markets that look like this, it's almost easier if you just kind of blur your eyes. Well, in this case, if we just zoom out a little bit, you can almost see it a little bit better. See how much better that looks? Now you can actually see the flag pattern forming right in here. Makes it just visually a little bit easier sometimes to zoom out. If you're just getting used to it or getting accustomed to trying to find these patterns, just zoom out a little bit more. That can make a really big difference. So in this case, first, we need to figure out where we need to get into the trade. So what we can do is we need to draw from the low to the high and just consider this down here, point A up to point B at that high. Now, what we're looking for is the channel or this pullback here. And it doesn't have to be exact. You can see the wicks popped out a couple times. That's fine. It's just got to look pretty close. And what we can do is we can highlight that one. We can right-click on it and copy it. And what we can do is we'll just paste that right in here. So then we can use that same line so we know it's the exact same line. And we can just drag it right down to the bottom. And you can see that was respected. That level was definitely respected on those lows. So we know that we've got a really solid-looking flag pattern here. Now, the lows of this flag is going to be considered the point C. Now that's important because this is how we're going to find our profit targets. So first, taking a look at this, what we're going to want to do is we can enter this a couple different ways. First of all, you can enter it on the immediate breakout right there. So you'd be looking to get long right around there in that area on that first candle that really pops out of that range. The other area is just to look for a pullback. You break out, you get a little bit of a pullback, that's your entry right there, and you can get going. A lot of times they end up pretty much in the same location unless you get a really, really big volume burst out of it. But most of the time you get, the candle that closes, you enter that either there, wait for the pullback, you would have entered in the same place either way. So, but that's where we're going to be entering. Now, the important part, now that we're in the trade, is we need to find our targets. So what we can do is we can use our handy little Fibonacci extensions tool, and we're just going to draw from the low, from point A, up to point B, and then back down to the low at point C. Now, I've got two levels drawn up on here. I've got the 50% and the 100%. And those are important because, first of all, the overall target is going to be the 100%. This is the key target right there. And you can see if we zoom in on price, you can see that was respected on the first, three tests. The first three tests it actually bounced off of it before finally breaking through. But the other part that's really kind of important is you want to get out a little bit earlier. You want to pocket some of those profits. A lot of the times what you'll see on these bull flags or bear flags or really any advanced price structure is you're going to get that break, and on its way up to that 100%, it's going to get a little kind of funky in there. And a lot of times when that happens, you might get a pullback back down past your entry where you might have been stopped out for it to just turn right back around and hit your target where you were already planning for the market to go. So to avoid that kind of, disappointment, a lot of folks will take this 50% as their T1. So if you're trading two contracts, take one off at that 50%, then the other one off at the 100. That way you bank some of those profits. And you can see we're definitely not the only ones looking at that, because if we look at that, you can see it was respected there as well. Came up in there, bounced back, kind of rattled around, and then broke higher again to respect the next level, the overall target. And that way you can pocket some of those profits and also have enough to stay in that trade and really let it go. So the flag pattern itself is a really powerful pattern, and it doesn't necessarily have to set up like this every single time. This is a really pretty looking pattern. It can be a little bit kind of a fluctuation off of that. It doesn't have to be exact. And remember, if you zoom out, it can help you find those price patterns. But preferably what you do want to see is you have that move up or down, and price begins to kind of channel out. You get that rattling from highs to lows. It can go above and below it a little bit. It is a channel. Remember, these are more like zones than they are specific levels. candles. But when you get that break, it's got to be pronounced. It's got to be a strong break. You've got to be able to see that conviction. And what I mean by that is if we zoom in here, you can see this completely stands out from the rest of the candles, where we've been respecting these areas, highs, lows, and then all of a sudden we get that weird kind of candle that blew out of that range. That's what I mean, a little bit of conviction in there. So that's how we know that we are starting to break out. You can either buy there or, again, wait for that pullback down here. So that's going to be taking a look at day trading with flag price patterns. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. Have a good one.